here. Take a look at iCOT. Now, obviously, this looks like it looks like the COT. It feels like the COT. It's obviously not the COT because it's got nothing to do with commercial volumes, has it? It's got nothing to do with commercial volumes. We've just looked at it against the OBV. Now, obviously, we've looked at it against the OBV. So what if I now look at this iCOT score? This is just the speculators, okay? So this is just the speculators. But what if I look at the iCOT score against a stochastic? How do you think it's going to look? I've just told you it's based around a stochastic, right? So how do you think the iCOT score is going to be looking when I compare it to a stochastic? Let's take a look and see what you think of it. So this is the standard out-of-the-box stochastic. What do you think of the iCOT score against a stochastic, guys? Well, there are differences. There are differences. And when you look at the differences, that might start giving you some interesting information, right? So, for example, we can all agree that there is a very significant difference between this price here and that price there. And you say to yourself, well, there's obviously something more than just a stochastic here that gives me the possibility that that might be a very, very, very good buy trade. And that's why it's worthwhile investigating these things. Because when you go through your investigation, you learn stuff. This is what you do when we talk about, Kim talked about the reverse engineering concept, the reverse engineering process. This is what you do when you reverse engineer. Whether you think it's a good indicator or whether you think it's a terrible indicator, you'll still learn something from it. Do you understand? So this could be what causes this to give you a lower price than this? What causes that to happen? Well, perhaps it's just a faster stochastic. Perhaps it's got a faster speed attached to it. But that's also similar to that high up here. So for example, that high up here, which is near 80, the stochastic's diverging against that. Is that a possible sell trade? Well, obviously, if you can look at those two prices there and say, that's a brilliant buy trade and that's a brilliant sell trade, and then you go into the markets and say, why is that a brilliant buy trade and why is it a brilliant sell trade? What does that difference show me? So if I look at the S&P during those two periods and try and explain that, because by rights, if that's a great sell trade and that's a great buy trade, this should be a great buy trade. So that we're not cherry picking brilliant examples of it. If that's a great buy trade, this should be a great sell trade because the stochastic started to sell off when it goes up into that high. Understand? If that's a great sell trade, this possibly could be a buy trade here because it's back into that same low price. So that might be a buy trade there. So that means that we can start investigating these areas. Let's see what happens when we investigate these areas. So if this is a possible buy trade here, did that make money? If this is a possible sell trade here, did that make money? If this is a possible buy trade here, did that make money? If this is a possible buy trade here, did that make money? And if this is a possible sell trade here, did that make money? So all of a sudden you've taken what looks like a terrible indicator, because it just looks like something else, it just looks exactly the same as something else, and you've now found the perfect turning point on every single example that iCOT never even printed a single candle color. So a clever engineer can actually find opportunities inside of these indicators, even inside the indicators. A clever engineer can look at that and say, actually, I could make that indicator work. I could make something out of that indicator. And you might be saying, well, let's prove the point. Let's see if there's any other examples where there's a big divergence. Well, what about that example there? Is that a big divergence? Could we all agree that that's a big divergence there? Is that not an absolute dead cert buy trade there, Gene? What do you think? Is that not a dead cert buy trade according to what we're doing? Yeah, it's a dead cert buy trade, right? So let's see if that buy trade makes any money. Let's take a look. Did that buy trade make any money, guys? Yes or no? So we can start to see that you might all be looking at it and going, what a waste. I look at it and say, what is the opportunity? What is the opportunity to find a trade inside these areas? What does it tell me that the stochastic doesn't? Why is it different? What is causing that difference to show up? What is that giving me as far as information is concerned? What is the difference between these two pieces of information? That difference could be significant. The difference could be significant. And obviously, if I recognize the difference, I could start saying, okay, I can see that and I can make money on that difference inside of the correct thresholds. You're saying, okay, what about the right-hand edge of the charts? Well, on the right-hand edge, remember, we have to still hit thresholds. We want to make sure that we're always trading thresholds. The threshold I always like to look at on iCOT is 80. So the iCOT has to hit into those 80 thresholds, but obviously against a prior high or a prior low would be good enough. So when we see the stochastic coming into the white zone here and the white zone here, we can start looking for divergences. So I could say, well, what about a possible sell trade here? That would be a reasonable sell trade there. What about this one? Well, that doesn't count, and that doesn't count. What about this one? Well, that doesn't really count because it's not actually breaking down through the lows. This one does count because that actually has just made a new lower low on the iCOT, so that's a buy trade. So there would be a buy trade, and there would be a sell trade, and there would be a sell trade. Into this high price, nothing. Nothing. Correct? Into this low price, nothing. So we've had two trades since the cash open, yes or no? Would you all agree we've had two trades since the cash open using this little process? Yep. I'm not cherry picking, Gene, right? I'm not cherry picking at all here. I'm actually just showing the difference in the diverging stories, either on the candle basis or on the background basis at new lower lows or higher highs. The signal is when the stochastic goes above the blue or below the blue. That's when I start looking. I'm not interested in anything in here. I'm not interested in anything in the middles. I'm not interested. So if that's my sell trade and this is my buy trade, did I make any money? Let's take a look and see. If that's a sell trade, did I make any money? If this is a buy trade, did I make any money? Does anybody want to revisit their thoughts that this is a total waste of time? Which I can understand and accept 100% that it looks on the face of it to be a total waste of time because it looks as if it gives you exactly the same as the stochastic. But let's dial it back a little bit. I can't recommend the iCOT as a standalone indicator because it gives so many false signals. I can't recommend it at all. That's what I was saying at the beginning. It's not bad. It's as good as a stochastic, and it's as good as a MACD, and it's as good as an OBV. But that's not how we're using it. It may be a missing piece to a jigsaw puzzle that you're maybe finally finding. It might be the missing piece, and it might just be a single line of code that causes that missing piece to happen. Do you understand the difference? Do you understand the difference? That missing piece to the jigsaw puzzle starts to give you something that you can actually look at and say, ah, but wait a second. And it sounds awfully like it's a filter on a filter inside a filter of a filter. But that's not what we're talking about here. We're not talking about a filter of a filter of a filter of a filter that lags the price so far behind that by the time you recognize that there's a trade, the price is already gone to the moon and back twice. It doesn't lag. It doesn't lag. So you've got to then say, okay, well, unless you know what the difference is, there's no point in using it. But that's what opens up the investigation. That's what re-engineering is all about. That's what the idea of a re-engineered process allows us to look at and say, that makes some sort of sense. And that's where it starts to become interesting. So it was just so that you feel as if you haven't maybe wasted any money, Gene. Obviously, if you're using it anyway and you think it's good regardless, that's, as I said, it's a visual. Nobody else can tell you whether it's good or bad, because if it's a visual that helps you, it doesn't matter whether it's a MACD, whether it's a stochastic, whether it's an RSI or a CCI, or whether it's whatever. Whether it's Elliott bloody wave, I don't really care. The point is, if it works for you, it works for you. Nobody else can tell you otherwise. They might not like it. It doesn't make any difference. If it shows you something that makes it sensible for you as a trader, then use it. If it doesn't, don't use it. Chuck it in the bin and save yourself some money. But one good trade and it shows you, all of a sudden, one good trade that it shows you can suddenly pay for it 10 times over in one trade. And you say, wait a second, there's an awful lot of false signals. How do I get rid of all those false signals? How do I get rid of all that noise? How do I get rid of all that horribleness so that I don't just get caught into buying a downtrend and selling an uptrend, like every indicator that has a stochastic based function obviously gets caught in all of those signals. How do I get away from that? Well, that could be an idea. It could be a part of a solution. Then you can say, well, that makes sense to me. That works for me. I can work with it in that narrative, inside of that world. Well, okay, there you go. But that's the difference, because I see it from an opportunistic opportunity. I see it from an opportunity lens. I always look at everything and say, well, let's see if we can make a terrible looking indicator work. What is it that people are looking at? And that's why we spend some time looking at terrible indicators, because there might just be a line of code in that indicator that could be a solution to a bigger problem. There's a brilliant story inside of the re-engineering book that Kim was talking about. Who was it wrote it? Don Friedman. There's a story in it about the pursuit of the iPad. You remember this? Did you read the book, Kim? There was a story of the pursuit of iPad, and they were looking at Xerox, and Xerox had came out with this product, and they'd all been invited along to see this Xerox product, and they looked at it and says, there's so many flaws in this product, and they took away the product and they basically gave it to their engineers, and they said to their engineers, take that apart. I want to know. Take that apart and tell me everything that moves in it. And tell me how we can get rid of this, and this. Tell me how we can use this, what looks like a possibly interesting product but not very good. How can we make it into something that makes it 10 times better, 10 times functional, 10 times faster, 10 times brighter, 10 times sexier? How can we take that same product? So when you start thinking about that from a trader's point of view, you might look at something and your initial reaction is, it's rubbish. Your initial reaction might be, it's quite good. Your initial reaction maybe, it's brilliant. But that doesn't really matter. You should always be willing to just say, well, hold on a second. Let's see how it works. Let's see what it does show. Let's see the conditions where it does work very well, and what kind of conditions does it not work well at all. When does it do brilliant? When does it do badly? Recognize the strengths and weaknesses inside that one product, and then take it apart and see if you can actually take the base start of that product and make it some way better. And just, there's nothing wrong with saying it's rubbish or saying it's great, but be willing to have a second look at it. Be willing to have another second glance and say, wait a second, what am I struggling with these indicators? What is it that it's not finding? What is it that's causing me to recognize the market's always rising and therefore I'm always going to be losing money inside of that environment? How can I stop that from happening? How can I avoid those horrible trades that don't seem to have any type of semblance of order at all at any stage? Well, We've just given you one possible way. We've just given you the one possible way to think about it. You know what I mean? Just to think about it. And inside that one possible way to think about it just might be a solution to some of the problems that you're experiencing with whatever indicator that you have got. You understand? Anyway, thought it was worthwhile just mentioning it, Jean, since you were talking about it, and I didn't want to dismiss it out of hand without offering a possible additional outcome. And I think that's always important when you start looking at a lot of these developments, because guys have spent a lot of time thinking about this and developing it out, a lot of expertise and trying to get something that really looks good. And I think they've just missed. I think they've just missed the boat on it. I think they've just missed what they could be doing with this product. And we did offer, as I said a while ago, we did offer to help them with their product, and they basically just said no thanks. But they never said no thanks. They just never bothered replying, which is typical for people who get a little bit upset when you say that you can improve on their product if they're just willing to open their ears a little bit. But they've maybe never came across somebody that's actually a professional in the industry, and for that reason, they think they probably know best at times, and they don't. Simply as simple as that, they don't know best. I don't know best. If somebody better than me comes along, I'd be delighted to hear from them. Until that time, of course, I bloody well do know who know best. You know what I mean? So in future, listen. Idiots. Sell-side bonds. Sell-side bonds, guys. Black over blue just now. Still sell-side bonds on the uptick. 181.12, 181.12. Short bonds looking to retest the lows. Anybody with me on the short bond? Anybody with me on the short bond, guys? Black over blue. Black over blue. Short bonds. So when the blue drops hard here and the black line is not dropping hard here and the price is exploding to the upside with massive volumes, I want to go short treasuries right there. It's an RGL in the background, a change of behavior in the background. I like that as a possible sell. And then there's the sell trade there. There's the work. 11's down to 4s. It's made a nice bit of profit. And that's all we can do, guys. Take a little bit of cash. I feel, I mean, it's like anything else. You know, when you're trading a stochastic based type product, the biggest challenge is that the market is in the world of a stochastic, the market is always rotational. There is no trend. There is no existence of trend. Now, there's obviously been some people suggesting, well, if it goes above the 50 or the 0 point, whatever kind of stochastic type function you're using, if it goes above the 50, it's in a buy trend. If the slope is up, it's in a buy trend. So there are areas and ways to start calling that as a buy trend. And if it stays above the 50, regardless of what else is happening, it's still in a buy trend. I don't like it as a mathematical solution to trend. I think it stinks, to be perfectly honest, because it's all time dependent, and for that reason, a market that goes quiet in a top line simply doesn't look like it doesn't look like the trend is still in, but the trend might still well be completely visible on the screens, but it's just because there's a drop off in the T component that that drop off suddenly sends the stochastic into oblivion to the downside, and you say, whoa, we're in a sell trend. No, we bloody well aren't in a sell trend, you moron. It's just the price has gone quiet. So if you understand how the calculation is made, you can use it. If you don't understand how the calculation is made, it's going to start giving you some signals that you simply go, oh, it's a sell, and suddenly it goes straight up and you go, what the hell happened? And that's when you've got to try and learn everything. That's why we don't just give people lines to put on their charts. We teach people what the lines mean. because then you can actually explain why things are happening rather than just saying something is happening and respond to it. You can explain why it's happening, and you would have been pre-prepared, hopefully, for it to happen in the first place. Crazy, 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 crazy. But that's exactly what we're talking about.